Timing the market?
Always time in the market.
You know what they say. I don't know who they is, but at the end of the day, it's about buying and holding on to that asset. You got to tune into this episode of the Monthly Market Update and find out more. Welcome back to the May Market Update. It is the end of May, so just as a disclaimer, I am Mary Bartos, and I'm here with
Cheryl Stokes.
And we're going to get right into this. So there are some myths about mortgage rates that we want to clear up. And Cheryl, you know, I know the market has moved from this slide, which is April 26th.
Yes.
As it relates to interest rates. But talk to us a little bit about that.
So rates actually have gone up since this point in time in April. You know, we were kind of on a downward trend there, but they have ticked back up, and we know that that is due to the economy, the Iran war, oil prices, bonds. They're just kind of ticking up right now, but they are still lower than they were this time last year.
Yeah, that's great. That's fantastic. And you know, we've done this kind of slide in the past, Cheryl, that talks about rates up and down, when to buy. You know, what is our rates? This was May 4th. It was 6.52.
They're averaging a little bit higher than that right now. But I think the thing to remember is when you need to move, you need to move. Mm-hmm. And the rates are going to be what they are because they do change all the time. And let's just try and work around the rates and get you to the payment that you need. Let's get your budget worked out. Because we don't have a lot of control over this.
Right.
They are better than they were, so the trend is on the good side. But right now they're a little bit volatile. If you need to move, you need
to move. But even if you look at this, 7.26% in 25?
Yep.
Would have gotten you a mortgage on a $400,000.
2731 principal and interest. Yep.
Yeah.
Yep. And so right now you're going to save $200 a month with the current rates.
Right. And if they go down to 6, which that's not what anyone's forecasting.
No, but so then you're going to save, like another $400,
right.
$300 per month.
But we could have concessions.
We can have concessions, and that's the thing. So right now, the rates, they're not exactly where we want them to be, but in a lot of places it is a buyer's market, and you can get seller concessions and buy down your rate. And in some cases, you can temporarily buy down your rate, but buy quite a lot and save for $500 a month on a short-term basis.
That's fantastic. So I know we don't have a crystal ball.
No.
Wish we did.
We wish we did.
But even our fearless three, Fannie Mae, MBA, and Wells Fargo, they don't have a crystal ball because when they did this at the beginning of May, May 4th to be exact.
Yep.
They thought Q2 would be down.
Right. And it's not.
It's not.
So, what's happening in the world and in the economy affects this. And we can all work really hard to make projections. But at the end of the day, that's where I say we just have to work with what we've got.
Right, exactly.
Because it's not a crystal ball.
Exactly. And the U.S. News said this, which I thought was kind of interesting.
Yes, mortgage rates aren't expected to change much over the next several quarters, which has implications for prospective home buyers and sellers, but it doesn't say if there are good implications or bad implications,
right.
Which I think is kind of comical, but we're not expecting drastic change. That's
right.
The main thing. We're going to bounce around. It's a little volatile right now, but we're not expecting anything drastic up or down.
And, I think the point on all of this is we've had a lot of craziness going on in our world in the last 6 months, quarter, et cetera.
Yeah.
Oil that we're not getting because of the war and, all of those things impact us here.
Yes.
And our markets.
Yes.
Now, when that comes up, that lifts and the war goes away.
You're going to see a reversal.
Yeah.
Yeah. Now, some people say, things go down slower than they go up.
Yes.
Which might be true, but we will see a change downward once all of this resolves itself.
Yeah, which is awesome. We're going to move on to another topic, Cheryl, than interest rates, because that's really focused in on the buyers, and the buyers, there has to be a seller. But we've said this a lot. If the price isn't compelling, the house isn't selling. And this is really the point of it has to be priced right. And people in our market here are looking for, homes that are updated. They're looking for things that are priced well.
Yep.
Every market across the way. So, we're kind of in an interesting time. And Realtor.com said, despite the economic headwinds whipped up by the ongoing Iran conflict and cooling consumer sentiment, most home sellers are brimming with optimism this spring and expect their properties to fetch top dollar.
So the one thing I will say is, despite the fact that rates have come up, I do feel like we have more buyers right now. I believe that people have adjusted to the higher rates. They've gotten over the anomaly of 2021. And at some point, you just have to buy. You can't continue to wait and wait and wait for something that may never occur.
Right. And that's if you have to move. I mean, also in our market here, we have second-time home buyers and investors.
Right.
But, we just had something. Someone walked into an open house last Saturday. They literally went out with the agent because that wasn't their price point. But they didn't know what they were looking for. Bought a house that they weren't expecting to buy here on their vacation.
Right.
Because it felt right. They wanted to get here. They wanted to, we have a lot of great things going for us. And one of them is potentially no more property tax or very, very low property tax. Right. So that's interesting, Realtor.com. So Realtor.com did a survey, and this was kind of fascinating to me, that 80% of sellers think they're going to get their asking price or more.
That is interesting. And maybe that's a regional thing.
I don't know. I do feel like a lot of our local sellers, do think that their house is worth more, so they should get more.
Right.
And so therefore, I don't know if they know. I mean, we talk a lot about what the average is, percent list to sale price, but this is kind of fascinating to me.
It means that people are optimistic for sure. But I think, and you always talk about this, is it priced right to sell?
Right.
And how long does it take? One thing I have seen in this market on the loan side is, while there are some homes that stay on the market for a long time, there have been in the last couple of months some bidding things going on.
Totally.
So if they're properly priced, then you really can get that enthusiasm out of the property.
Absolutely. But don't think that it's every property.
No,
this is
not even close.
2021, 2022 anymore.
Right.
We are actually bringing on a home. Unfortunately, they got caught in the enthusiasm, and it's worth less than it was then.
Yes.
But, this is also from that same survey from, no, this is a different source. It's Redfin and Resi. This is actually what's happened for the list price and how many percent are getting less.
Yes.
So you can see 62% were back on 2018. We've talked about that a lot. This feels like a 2018 market.
Yes, for sure.
Right? But when you look at 21, 22, they got their list price or more. Right? So go ahead and read this by Har.
This says the listing price is one of the first details potential buyers notice when browsing properties. A well-priced home can generate more interest and increase showings. On the other hand, if a home is priced too high compared to similar properties in the area, it may struggle to attract buyers and remain on the market longer. And we know that's true.
Absolutely. Absolutely. We have a seller seminar that we do, and we look at some examples of that. When we went in and another agent went in at a much higher price, got the listing, and then sold it for way less than we even
had originally projected.
Yeah, which it would have gone faster. So this is that survey. Part of that survey is share of listings with price reductions in April of each year. So again, we're a little bit high in 26 for 16.7.
Yep.
But 25 was 18, but we are not 5 and 7% of listings only had price improvements because they were going like hotcakes.
They were. And if you look at 18 and 19, which we always refer back to as a normal market, we're kind of on par with that.
Absolutely. Absolutely. Again, this is a NAR source, and these numbers are a little bit different than if you're in one of my listing appointments, because that 0 to 14 days, they're saying you're going to get like a 4.9% decrease off your price. I think it's closer to 2.
Yeah.
But I'd love to see this study that they did that they're talking about here, because I do believe it. But they're saying that if your property stays on the market up to 120 days, you could get a 13.8% reduction on your price, which is a lot of money. And when you look at an example of, say, a $400,000 priced home, instead of selling it for $400,000, you're going to sell it for $344,800.
It's a large difference.
Yeah.
And when people have an expected net outcome to move on,
Exactly.
there's a difference.
Exactly. So we need to price it right.
Properties that sit on the market and go through multiple price cuts can develop a sense of staleness. Today's buyers are not only aware of that, they're actively tracking it in real time. When a listing lingers or undergoes reductions, buyers begin to question the asset itself, even when the issue is simply initial pricing. So true.
So true. So true. It is near and dear to my heart, and it's when I choose to let a buyer, or the market shifts, a seller, pick a very high price, and we're like, well, we'll try it, and then they don't want to improve the price. That's on me,
right,
as a professional, right? So that initial price needs to really be worked with. And I don't have a crystal ball. They're not always right, but the market will tell us if we're right or not.
Yes.
Based on showings and views. Now, Cheryl, it's funny because the sky is falling, and everyone thinks that interest rates are crazy and what am I going to do? Well, you look at this, how much has Florida had in equity? It's the highest in whenever, right?
Yeah, and so you have to realize that it's kind of a trade-off, because you see online people talking about the golden handcuffs. People bought at 3.5% or 3.25%, and now they can't sell. But the trade-off is in that time period, their equity almost doubled, right? So they may be going into a property that costs more per month based on interest rate, but they built up all of this equity that they're going to use to move forward,
right?
Or that they can they can pull out and use as down payment to purchase for something else, and then they can rent that property. There's all kinds of things that they can do based on the fact that they built a lot of equity at a low interest rate. They can still keep it and pull that out. So there is a trade-off, and I think people are starting to come around and understand that they don't have to feel stuck in that property forever because they've got that great rate.
That's right. I mean, here in Florida, it says we have $275,000 on average equity per homeowner.
It's a lot.
It's a lot, depending on your price and what that is. But, let's go down that path. Let's look at the percentages of people and the rates they have, right? So you just talked about the golden handcuffs. 50.6% have less than a 4% interest rate.
Right. And some people feel trapped because they feel they can't overcome the new higher rates.
Right.
But those people that have 50% have more equity than everybody else as well.
Right. Exactly.
Generally.
Exactly. So, then you look at the wealth. We have 39, almost 40% of people own their home free and clear.
Right. Which is a phenomenal number. Phenomenal.
Yeah, and more than half, 50%, that 27% have 50% or higher equity.
Yep. And again, that's where I am seeing people are utilizing their equity to do additional things. They're not always selling those homes. They're utilizing that equity to buy an investment property, to move on to the next home, and then they'll sell that home later when the market feels better to them. There are a lot of things that they can do based on the equity that they hold.
So, also if you're a buyer out there and you think you're going to get some crazy deal and that person's been in that house for quite some time, they got a lot of equity. They don't have to sell. Maybe they will. Maybe you'll get a crazy deal. But, at the end of the day, they don't have to, and a lot of times people in our market don't have to sell, just like a buyer doesn't have to buy.
Correct.
Now, if I'm living here and working here, I need a house.
Right.
Right. And I moved for various reasons. We did a quick survey, actually, on our team. It was interesting. I'll have to put it in a social post. But of the people that on the call that we had, and I probably had maybe 8 or 9 of our agents, we took a poll as to where the buyers came from. Were they looking to move up, move down? Were they investors? Was this a second home, et cetera? And the results were amazing. I'll have to share that in another post. So let's get into our market. I like to look at sales over a 24-month rolling period. And as you can see, like if you look at Naples, the highest number of sales have been in 26. For Naples, Marco, for, yes, it's better than 25 in Fort Myers. And it's better than both 24 and 25 in the Cape.
And that kind of justifies what we said. It is busier.
Yes, it is definitely
there
busier.
There are more buyers.
Now, let's look at median close price. Yes, the highest orange on here is Marco. So this is a median close price, and that's $1,050,000 for the last couple of years. In 24, it was a little higher. Okay. But you can see, a lot of these are not, people say the sky is falling, there's 30 or 40%. Right. Now, don't get me wrong. You could have a 10% cut.
Right.
If you were caught in escalation and multi-offer and all of that. But on average, that's not what we're seeing.
No, the sky's not falling. There's some loss in some places, but not a significant amount. And we're not seeing major drops where someone feels like they can swoop in and lowball. That's just not going to happen.
No, it's not going to happen. Okay. People always ask me, Cheryl, what is my percent of list price to sale price, right?
Yep.
And you can see we're roughly, Cape Coral was 97.3. So what is that? 2.7% off list. Not bad.
Not bad.
And the lowest one was 95.1. It's not bad. That's, 4.9%.
That's not bad at all. That's within a common average.
Yes.
Yeah.
Exactly. So, once you get your price right, now that doesn't mean that every house is getting that. This is, an average or percent.
Right.
But let me tell you what you do need to know. We are seeing some expireds, things coming off the market because the owners wanted higher than what the market would bear.
Right.
So they may just bring them off the market. And I did not put in this slide deck the number of listings that we're carrying, which is way lower. Our inventory is way less than we've had in quite some time because we had a lot of inventory. April days on market. I like to show days on market because, on average, we're looking at the lowest this year was in the Cape for 80 days, and the highest was Marco at 131. But, I like to look at them for 3 years in a row so you can kind of see where they're going. Again, price brings days on market down.
Yes.
Again. A couple more slides, Cheryl. Again, showings to a pending. I work with a lot of sellers personally, and they're like, wow, how many showings did I get? Well, this is how many showings you're going to need to get to a pending. So, if you look at Naples, it's 9. It's been pretty consistently 9 showings to get to a pending. So 9 people have to walk through that front door, right? The lowest here right now is 6, which is in Fort Myers and the Cape. Yep. But how many are we getting in a month? That's usually, and that's the next slide. Wow, look at the Cape. They are getting 4.8 showings in the month of March because we're this is month of April data. We're a couple months behind. We're at the end of May. 4.8 people are walking through the front door. That's not bad. If I look in the orange, 3.2, and the red in Fort Myers is 3.2. So Marco and Fort Myers both only have roughly 3 people walking through the front door in the month of April.
And if it takes 9, that tells you how long it's going to take.
Yeah, exactly. So we always look at views. We look at people walking through the front door. That tells us how the market is responding to your home.
Right.
You sold a home recently, and in the last year or 2, gosh, where's time?
2 now.
2, and you saw that. I mean, the thought of price where you thought you were going to sell it was a little bit less.
Yep.
But you moved with the market, and you got it sold very quickly.
Yes.
Which was smart. So, Cheryl, we're kind of always to this place to say, is it time to move? We talked about it. Mm-hmm. Go ahead.
I say it every time. It's always time to move.
Right.
Based on your personal circumstances. The market matters. The interest rates matter. But if it's time to move, talk to the professionals, and have them help you find the way that will enable you to go ahead and move.
Absolutely. And that includes concessions. I mean, we haven't really talked about concessions in a couple months, but we might want to shake that off a little bit later.
Yeah, I think people have to understand there are many tools to make the market work for them, and concessions is one of them.
And if you're a seller, we'd love to talk to you. If you're a buyer, we'd love to talk to you because we want to help you move on to your next destination. So until next time, I'm Mary Bartos with the Bartos Group of Premier Plus Realty.
I'm Cheryl Stokes with New American Funding.
We look forward to seeing you here in Paradise, buying or selling.